everyone. Good morning, good afternoon, and good evening, wherever you are. My name is Leslie Lam, and I'm the host and producer of the Crypto Unstacked podcast. Today, I have a very special opportunity to be guest hosting on Real Vision. And here with me today is Darius Sit, co-founder of QCP Capital, which is one of Asia's largest and most respected crypto OTC desks. Hey, Darius, welcome back on Real Vision.
Thank you, Leslie. Good to be here.
Yeah, so last time you were on the show, you and your co-founder, Josh and Raul Powell, covered really a number of topics. Basically, you gave the primer on how QCP Capital got started, what your main businesses are. You covered everything from real crypto use cases in Asia, specifically on the topic of stablecoins and settlement, to ways that yield capture opportunities are being democratized through crypto. So for those of you tuning in, if you haven't listened to the last episode, I highly encourage you to do so, as it puts our conversation today with Darius in good context. So Darius, what this means for us today is that we're going to be exploring and teasing out themes that build on your last conversation with Raul. And there's a lot to talk about, but I think it would be great to break down our conversation in a few thematic buckets. One are the global macro drivers that you think are really impacting the crypto macro space, or the crypto market space, your crypto macro observations. I know you have a lot of those. Your thoughts on crypto market microstructure as it relates to CeFi and DeFi as well. Let's start with your meeting with Paul Tudor Jones. Actually, that would be quite fun to kick things off.
Yeah, that was a good one. So I was in Miami last week, met up with Paul Tudor Jones. I think we're starting to see the two worlds really collide and converge. I mean, I had to change my trip schedule to go down to Palm Beach to meet him. He was a nice guy, very well informed on what's happening in the crypto markets. I mean, that fact alone is an interesting one. That he has been, he was the one that sort of pulled us out of the crypto winter, right? I mean, back then when Bitcoin was like 4,000 or so, it was that announcement from that he had bought Bitcoin that sort of took us above the level, and and then we haven't looked back ever since. So I brought up that fact, and he was very amused by that. But yeah, he's been a big supporter of Bitcoin as a inflation hedge, and he has been a Solana bull as well. So I think he's probably a bit more into the space than people think. At the same time, he's also been quite amazed or shocked at some of the valuations that we've been seeing in crypto. So I think not just crypto, right, in macro as well. So we discussed like Tesla trading at 380 PE. We discussed inflation numbers, and we discussed crypto valuations as well. So I shared some anecdotes of some projects like all the gaming guilds trading at billions of dollars, some of the DeFi projects trading at billions of dollars. And he was very concerned that we are at tail end of a bull cycle. So I think that's something that he brought up, that he hasn't been seeing this kind of froth since the tech bubble. So at the .com bubble, I mean. So yeah, I think pretty interesting conversation overall. The message that I took away from him was, do be wary of valuations and inflation. So, something that we are looking at, planning for as well at this point.
Yeah, let's talk about that inflation story. So for those who aren't familiar or even know that Paul Tudor Jones is in Bitcoin, he indeed is. And I'm sure his portfolio has grown a tiny bit since he first allocated to the space. But when he first announced this, he put forward this thesis called the Great Monetary Inflation, and very fittingly, the acronym is GMI. This thesis is the reason why he believes Bitcoin as a store of value, right, as you said, Darius, is a sound hedge against what he calls the new inflation era. And what he's referring to here really is the growth of the M2 money supply, right, which has really outpaced real economic growth. And this really isn't something we've seen since the inflationary periods of the 1970s and 80s, right, under the Fed chairs Burns, Volcker, and Greenspan. So does this dynamic, Darius, worry you? The fact that inflation, the CPI in the US is, 6%. We started out the year, near 1% or so. And how much does this narrative impact crypto?
It has a strange impact on crypto, right? Meaning that in one sense, it has benefited crypto because the cheap money has pushed crypto prices high, right? I mean, no one can deny that. At the same time, how would crypto prices react to a correction in traditional markets? When there's high inflation and the Fed is forced to taper. That remains quite a big question for everybody. As to how the crypto markets and how crypto valuations would react to traditional markets in response to inflation. So it's inflation hedge on one hand, but at the same time, it also has that correlation when there's a deleveraging cycle. So, a bit of a strange one to tackle. I think one thing I discussed with Paul as well was that the inflation theme is not just a case of the Fed printing money. Historically, it's always been central banks that print money. Right now in crypto, we have a situation where everyone can print money, right? You and I can print money. I can create a token and print $1 billion overnight. It's possible, right? So we have a situation where inflation might be worse than we think because it's not just the Fed printing money, it's every other project and every other person is printing money. So the question is, do we head into a situation with hyperinflation, where literally, I mentioned this to him that the term unicorn has become a bit of a misnomer in crypto because every other project is a unicorn. So how do you justify that? How do you make sense of that in this environment? So I think what he said was he feels that he feels very cautious, but at the same time he also said that he would never short crypto. So bit of a mixed message.
That's
there,
a strong statement.
Right? He would never short crypto because the amount of the positive feedback loop that happens here could go on for a long time, and it's very hard to mark the end of it, right? He says it's a bit clearer for traditional markets. He feels like the turn of the calendar year would create market highs as they have done in many markets before, but not too sure about crypto. So yeah, I think we are all aware, especially for us who have one foot in the venture side of things, that valuations are a bit crazy. But the truth is they can and they probably will get a bit crazier before we see a market high. So yeah, I think a few themes to think about. No real clear answer to that. But his advice was, if you're weighing the money on some of your stuff, might be smart to take some off the table.
Was this meeting prior to the weekend sell-off or during?
It was just prior to the weekend sell-off. So I had met him, and we had posted a summary of some of his views in our usual market update and broadcast. And I don't think he caused it, but it was quite timely.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.